Hello, my name is Katie Wantoch, Agriculture Agent for UW-Madison Division of Extension in Dunn County. Today, we're going to be talking about working with your lender. Low commodity prices and increasing debt levels are placing some farmers in serious financial distress. This video series will discuss how you can work with your lender, from learning about the 6 C's of credit that a lender may consider during your loan application, to identifying steps to complete your loan application and establish a relationship with your lender. Prepare information before you meet with the lender, such as a business plan. Business plans can be written or only thought about and not yet put on paper. This is especially important for new startup businesses to have compiled information, such as the background or history, your personal and business history. Strategic plan. Have you identified your strengths, weaknesses, opportunities, and threats? Goals and objectives over the next year, 3 years, or longer. Reasons for decisions such as cost of production or break even. Timelines. When are you going to be selling your products? Budget projections. Do you have what-if scenarios? Marketing plan. Who are you going to sell to? Do you know the demographic information of your customers? What is the best way to reach these customers? Before you meet with a lender, you may want to select a credit source. Commercial banks offer a variety of services, including short, intermediate, and long-term loans. Be sure to work with a lender familiar with agricultural loans. Farm Credit is a nationwide system of cooperatively owned lending institutions. Most lenders have a farm background and offer products similar to banks. Some may offer additional services such as farm business consulting, tax and record-keeping assistance, and estate planning. USDA Rural Development works in partnership with private sector and community-based organizations to help fund businesses that create or preserve jobs and/or promote a clean rural environment. USDA's financial resources are often leveraged with those of other lenders to meet business and credit needs in underserved areas. USDA Farm Service Agency makes and guarantees farm loans for capital improvements and operating expenses. They also have targeted loan programs for youth, beginning, minority, and women farmers and ranchers. The SBA, the Small Business Administration, offers loan guarantee programs for small businesses, some of which are aimed at agriculture and women-owned. The guarantee is up to 90% of the loan value for purchases of working capital and fixed assets. Individual investors or groups may also be an alternate source of funding. Your lender generally requires these financial statements be submitted with a loan application. A current balance sheet with supporting schedules and inventories. This information is essential and should be as current as possible within 90 days of your application or the prior year end. An income statement or tax return showing a record of earnings should be prepared for the past 3 years. If a major change in the business is anticipated, a projected cash flow may be required. This may include a transitional year and a normal operating year projected cash flow. A good set of records showing production plans, short and long range goals, and procedures for implementation and evaluation may be needed. Personal debt information also should be included if outstanding personal or business credit card debt is not listed on your balance sheet. Other sources of income concerning the amount and stability of off-farm income or other sources of income should be listed.